Welcome to the Stable Income Yearly Feedback Session, focusing on the income generated versus expected, capital value, return profile, and makeup of underlying funds. Really a tricky year to date across all asset classes, locally and globally, as markets focused on rising inflation and very aggressive rate hikes from most central banks across the world. Tough place to be in fixed income markets at the moment, but thankfully the Stable Income solution has provided the necessary protection and has delivered a better than cash-like return. Looking forward, local inflation still ticking up and above 7%, and there are fears that this will become out of control, but we are confident that the Reserve Bank is on top of this and are expecting further rate hikes and seeing some stability returning to the markets towards the end of 2022. Growth very resilient locally than initially thought. Rand continues to perform well relative to other emerging markets, and our terms of trade still elevated, as well as the commodity boom contributing. Global flows slow, mainly to global inflation fears, and will stabilize when inflation peaks in the US, UK, and Europe. As you can see year to date, the money market returns around about 2.6%. The All Bond Index flat at 0.41%. The All Share Index down 4.43%. Our local property index down 4.99%. The global equities down minus 10%. Global bonds minus 8%. And global property minus 9%. If we look at the Stable Income, the objective of this fund is a minimum period up to 3 years, especially looking at emergency funds and short-term needs, so that you have stability in capital, as well as delivering a high level of income relative to prevailing interest rates. If we look at the capital value, since the launch of this solution, 100,000 Rand invested since 1st of July 2019, up until now, June 2022, that 100,000 would have grown to 119,000 Rand. The objective is not to lose any capital over rolling 12-month periods, and the reason for breaking it up into calendar years. When we break down the return profile, as you would remember, total return is broken up in income and price. The income generated by this solution has been 6.3% and capital has been negative 0.5%. When you add these two, you get to the total return of 5.79% annualized since inception. When we compare the projected versus actual income, in the first year we projected a 7,260 Rand and the actual income has been 7,100 Rand versus the ASISA income sector producing 5,427 Rand. The second year we expected 7,100 Rand, delivering 6,496 Rand versus the income sector producing 4,000 Rand. Third year, expected 6,300 Rand, delivered 5,945 Rand versus the income sector 4,250 Rand. And then for the fourth year, we are expecting 7,300 Rand in income produced by the Stable Income Fund. When we compare to money market, as an objective to provide you with higher income than the prevailing interest rates, you can see in the first year delivering 7,100 versus the money market sector at 6,100 Rand, 6,400 Rand in the second year versus 3,500 Rand, and then in the third year 5,900 Rand versus 3,700 Rand. So from an income perspective versus the money market, we've done well in that sense. If we look at since inception number, the solid line is the price movement of the Stable Income. As you can see, very low volatility from a price point of view, getting to that objective of no capital loss of a rolling 12-month period. And you can see that the income produced by the Stable Income increasing over time. the underlying portfolios and funds that we use within the stable income, the Amity BCI Diversified Income Fund, 100% managed by Matrix Asset Management, with a benchmark of 80% STEFI and 20% the bond index, the 91 Diversified Income, Fairtree Flexible Income Fund, as well as Granite's Multi-Income.
This was a yearly feedback session focusing on the performance of the stable income solution, where we discussed the income generated versus expected, capital value, return profile and makeup of the underlying funds. Join us next week where we will be providing you with feedback on the inflation-protected income.